Hi, this is Brian Hunsaker, Chief Investment Officer at Gate Global Advisors. Today we're going to review American Express earnings call fourth quarter 2018 ending December 31st, 2018. Today is February 1st, so they reported earnings on January 17th. American Express is a global financial institution operating in about 130 countries around the world. They provide consumer and business charge and credit card payment products to these customers. American Express is a little different than the typical business model if you compare Visa and MasterCard. They are a closed loop network, and they basically own the whole transaction when you swipe your card and it gets approved, and they make fees on those transactions. Where Visa and MasterCard and back to American Express, they also take on credit risk, meaning they'll actually give you credit. Where Visa and MasterCard work with banks and other institutions, and those banks and financial institutions actually issue credit, but Visa and MasterCard really just own just one portion of that transaction when someone swipes their card. That's the difference between the two business models, and we can get into more depth, but that's just kind of a high level analysis of the different business models. So right here you can see revenue, this line here, and revenue has been pretty flat. In fact, it's slightly down over the last 10 years. It's actually 28 billion versus 26 billion the last trailing 12 months. During that time frame, they lost the Costco account. I think that's in 2000. I don't know exactly what year that was. I don't think it was that far back, 2012. But a few years ago, they lost the Costco account. That hurt their top line revenue growth. Revenue down here, you can see the net income line, 2.6 billion, 2008. And here, the trailing 12 months are looking at 3.6 billion. They earned 5.4 billion in 2016. And then earnings per share has grown from $2.48 to $4.23. The most recent quarter, and then dividends have increased from 72 cents to $1.44. So dividends have almost doubled over that time frame. And then American Express has been an active buyer of their shares. They've been returning capital to shareholders through stock repurchases. They had 1.1 billion shares outstanding, and now they have 863 million shares outstanding. Pretty good for a financial company, pretty good metrics on return on assets and return on equity. Although their return on equity has come down over the last few years, they historically have been above 20% return on equity, and that's recently come down. And return on assets have been in the 3% range, and that's down at about a 2% range. Much like our Bank of America investment, American Express is really not a revenue growth company, but more of an earnings per share growth company. And we think earnings per share can grow at a very healthy clip, 10%, in that 10% range over the next few years. And we think the company is selling at an attractive price. So let's review their fourth quarter report here. And you can kind of see some of their high level numbers here. Total revenues, net of interest expense, this is adjusted by currency, was up 8% year over year, or for the quarter, and for the year, it was up 9%. And FX adjusted, basically 10% for the quarter and for the year. Net income was up 9% for the quarter and up 20% for the year. So again, we're seeing real good, strong net income growth. And then earnings per share was up 11% for the quarter, and for the year up 24%. And shares outstanding declined 2% during the quarter and down 3% during the year. So they're returning capital to shareholders through stock repurchases and also dividends. American Express in this slide is showing you their fourth quarter bill business growth by customer type. You can see here that global commercial, this area was up 10% and 21%. That's U.S. and international. And then large global corporate was up 7%, and global consumer up 9% and 17%. And then you see down here, global network services was down 4% for the fourth quarter. Here you're seeing trends in their build business growth, and you can see the international consumer has grown 17%, global commercial up 10%, and U.S. consumer up about 9%. So we're seeing really strong growth across all business lines. Because American Express does issue credit, these are important numbers. You can see that their credits have been really strong. Lending net write-offs, those are loans that they write off, is down to 2%, and charge-offs are down to 1.4%. So these are 30 days past due, and good loss ratios. You know, I owned American Express during the financial crisis, and they never lost money during that time. They stayed profitable during the whole time, and that was one of the very few financial companies that did that. Here's their currency adjusted revenue growth since Q3 2017, and they've been approximately growing revenue between 8 and 10%. And we'll take it. I think that's a very healthy return. This is their breakdown of revenue. So they have discount revenue, which was up 8%, net card fees up 11%, other fees and commissions up 5%, other revenue down 7%, net interest income up 19%, revenues net of interest expense 9%, and FX adjusted 10% for the year and for the quarter. It's important to look at expenses, and you can see that their expenses have been going up. Marketing and business development expenses for the year was up 13%. Card member rewards was up 12%. Card member services and other was up 28%. And operating expenses, they kept a real lid on that. For the quarter, it was down 1%, and for the year, it was flat. And total expenses for the year was up 8%. These are this right over here is some balance sheet issues or items. Common equity tier 1 is 11%. You can see that their common equity continues to grow, and that's just a sign of strength at American Express, and also showing returns of capital, actually paying dividends and buying back stock. And you can see in Q4 they returned $1.1 billion in a capital return. Here's the 2019 guidance for revenue, 8 to 10% for 2019, and earnings per share of $7.85 to $8.35. So if you compare those earnings numbers, and recently, in fact, if they earn that in 2019, you can see their earnings here, $2.48 to $4.23, and here we're showing $7 to $8 in earnings. So that'll be a really nice earnings boost for 2019. And we think the stock currently trading around $100, $110 a share, and almost $8 or around $8 in earnings. We think the stock looks very attractive at these prices. In fact, we have a intrinsic value on American Express of $130 or more, and growing that intrinsic value over time. So in summary, American Express is everything we look for in a business. It's a business we understand. We think they have long-term competitive advantages. We like their management team, and we think the stock looks attractive at these prices. It's a good price. All right. Well, thank you for listening.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.